Hey, good morning. Happy Monday. Como talibut to you? Today, I suggest we go through the dollar pairs, the yen pairs, gold and oil, do all the things that Forex traders love to do. I suggest we do it now. So good morning to you. Hey, I got 8 hours sleep today. As you can see, I'm just starting. Just starting my day. Oh my God, 7:30 in the morning. I'm just starting my day. Uncle Wayne needs it. Anyways, let me remind you that trading is risky, not appropriate for everyone. The past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeah, so NFP was on Friday. I thought it was a good NFP. And I haven't been able to use my left hand since. That's what happens when you write papers all day, trade all day, all this kind of stuff. After that 3-hour webinar, I'm like, oh my God, my left hand hurts. I haven't even been able to use it. It was so bad, right? How bad was it? It was so bad. For a second there, I forgot about my sore hand on Friday. And I'm like, hey, I got that Japanese beer in my fridge upstairs. So I run upstairs, I'm like, open up the door with my right hand. I'm like, oh, look at that beautiful Sapporo. And I grab it with my left hand. I can't even lift it. I'm like, oh! So anyways, it's still pretty sore. So hopefully I can get through today. I have a 20-page paper I need to write. And I only have one hand. So anyways, that's going to be interesting. I'll get through it though. So we got to do some currency trading. I hope you set up your swings. I hope you traded non-farm payrolls. Well, oh yeah, time changed. Yeah, but you should know all these things, right? There's a beard, yeah, from November. Yeah, of course. Is that how they do it in Thailand? Yeah, November. You got a little bit of gray though. Have you put on weight? I don't know. All right, so anyways, let's just get to it. Yeah, have I put on weight? Maybe. It's just wine. All right. Really? Am I that bad? Seriously? Am I chunking up? Maybe. I'll have to check. Thank you for pointing that out. I'll check. All right, so let's get into it. La 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 la. Oh boy, this goes back how long now? Look, I want to sell it here. 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 Now here we are. I still want to sell it at the same price. Come on, you cad. Oh, Chuck. Okay, a little bit of gray. Okay. Well, I can't do anything about that. Everyone's waiting for this Super Tuesday. Yeah, we got elections tomorrow. Should be a big one. Should change everything. Everything's going to be different now. So anyways, what's the trade plan going on here? I'm thinking down, up and then down. Well, maybe, right? You can see we got a nice level of resistance, which I've been doing now for, this is our 3rd week. You guys remember doing this arc? I can't even move the arc. Yeah, I can't even move it. But remember doing the arc? I'm like, look, I want this to roll over up here. Even though it's made a higher high, I still want it to head down. I want oil to go up. You know, Iran is now the embargo on Iran has now taken place and all that kind of stuff. So maybe we can bring supply down. I don't think demand is an issue and all that kind of stuff. But if macroeconomics continue to improve, demand should increase as well. Right? Well, these are trade plans, right? You can't be upset about that. These are just trade plans. I wanted to sell here, and then these were sells, and that failed. So basically, double top type sell, and then sell again. They're just trade plans, right? Do you remember doing plan A and plan B, that kind of stuff? They're just trade plans. The gray lines, gray areas, you should be able to figure out just support and resistance. I don't find this complicated. I don't even have moving averages on here, right? Halfway through, right on, Alan. Yeah, and Peter says, like, this one's annoying me. Yeah, me too. But, you got to try to teach yourself to not be annoyed. Okay? You just really have to be sort of Zen about it, or Taoist or whatever. By the way, the other day I said, hey, I should probably go to a meditation retreat in India, and someone popped up a link for it right after that. I think it was Osho. So I looked it up. Oh, for show. It looks all right. It looks like a place for whiny millennial Europeans to get together and try to justify their meaningless, easy lives. And meanwhile, there's like Indians like, oh, this money is just too easy. This money's too easy. Anyways, I should go to Bali. Yeah, too many Australians. So anyways, plan A and plan B this week. So I just still want to roll this over for all the same reasons, right? I studied ecotourism at Harvard because of a project I want to do in the Caribbean. Anyways, it was interesting. They're like, yeah, Bali ran out of water. They're like, what? Yeah, here's how it rains in Bali, and they showed the mountains, all this, and here's where the watershed goes, and this is where it goes into underground aquifers, except they built all these hotels, sucked it dry, and there is no natural water in Bali. You're like, really? Yep. Would you get a watch, Pharaoh? Okay. Anyways, up, down, up, up. So that's kind of what I'm thinking about, for CAD, anyways. And I would prefer to see dollar weakness, but you can see I'm not quite getting that. But they're just plans, right? They're not predictions. They're plans, and you got to learn, I suppose, the difference, right? So if you were a bull, well, that's not a prediction at all. If you're a bull, what prices would you like to buy this? And, well, a bull would like to buy this euro dollar right where we are, 113.69. Doesn't mean it would go up, but if there are bulls, that should be a pretty good price. That's a pretty reasonable price for these bulls. Okay. The better price is really closer down to here if you're a bull. Okay. So you kind of want to simplify everything and say, okay, if I'm a bull, this was better. Okay. And if I was a bull, this is acceptable. Not ideal, but acceptable. Okay. That's a good idea, Jimbo. Right? So anyways, very interesting. But what plans are on the plate now? Well, this was a sell and this was a sell. We had bearish trade plans. Okay. And if you remember, NFP, remember doing this at NFP? Plan A, plan B, sell here or sell there. So maybe that's just worked, right? So I don't want this to come down, but you have to ask yourself, where are we in the cycle? I would like this to go up because I'd like to play it like a double bottom. Okay, and that's why plan B today is this. Okay. But for that to work, don't you have to have a plan for the month? Don't you have to have a plan for the week? And then what about your plan for today? Well, your plan for today, since we've had a move like this, your plan for the day is probably catch a retracement like that somehow and then take it up. So how could you do things like that? Well, you could measure yesterday's trading range, right? That's classic. That's classic trend trading, the stuff that I've been doing for 20 years. So we can go into that if you want. Are you a bull? I will clear this up for you. Let's just totally clear it up. Let's go there. Okay. So what do you want to do? You should already know. Right? That's the interesting thing about having a bias. You should already know. Are you a buyer? And if so, what prices would you consider buying? Okay. Let's go out to an hour. Let's see if I can squeeze that in there. I'm gonna make you sing. Give me half a chance. Ride on the waves that you bring. Da 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 da. Okay. How about something like that? You could also fib it this way. Okay. If you're a bull, you just say, well, this looks like a 618. Okay. So plan A for this one, if you're a bull, is somewhere in here. You go long and in there, right? Based on basically a counter trend. Does that make sense? But you have to be a bull. How about a bear? Well, a bear would have looked at the lower low. Let's identify that. This low is lower than that low. Is that going to work? It's not going to work. No, I lost it. Insert shapes. Triangle. There you go. That low is lower than that low. Right? This low is lower than that low. So a bear would fib this. Okay? And the sell zone is somewhere between the 382 and 618 Fibonacci retracement. Let me see if I can get that a little better. Okay. Is that a fair bottom? It's a little higher. There we go. All right. So a bear now would have had this set up this way. Okay. Now the interesting thing you'll note here is they don't really disagree with each other. Both a bull and a bear can get this to work, right? Both a bull and a bear could have their trade plans work today, right? You see that? So let's say a bull wants to buy down here and a bear wants to sell up here. Well, a bear would sell up here, bring it down here, take profit, and bulls would buy. They're almost working together. Sure, Hassan. Okay. Now, Hassan, it's actually fairly easy to figure out. They're measuring the candles, these candles here, right? What moving averages are also measuring short-term candles? What moving averages are measuring price? The 5 and the 8. Okay? And it's looking at the 5 and the 8 relative to the 3 candles previous. 1, 2, 3. Okay? So that's all they're telling you. And that's why, like MACD is 21.55.8. It's looking at the distance between the 21 and 55 moving averages over 8 periods. Okay? And when they start to narrow like they do here, the MACD crosses up. And then when they expand, the MACD crosses down. And when they cross, it goes above or below the water line. So here's where it not only is moving up, but it crosses above the water line. Heads up here, crosses down for a little bit. It goes up even further, then crosses down, 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 and is now touching the water line. So I could draw the MACD anytime I need because I understand what the MACD is doing in the relationship, right? And so the same thing, like you should be able to guess my stochastic indications, because my stochastic settings, because you know my moving average settings, and you know how I use the stochastics. So you should say, well, I know there's at least a 5 and an 8 there, but over what period? Is it 3 periods, 5 periods, 13 periods? Well, I want it very, very sensitive to price action. So in this case, it's over 3 periods. Also, 3 is a Fibonacci number. Is that right, Pharaoh? You got scammed and didn't get money? Wow. That's terrible. I don't know how that would have happened, but that's terrible. Next time, get the money before you let go of the product, huh? That's terrible. Hopefully your mom didn't scam you. Come on, Mom, you owe me. Shut up. Oh, less sensitive? 8? How about you can consider, let's say 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 366. How about that? Yeah, that's what everybody says. I'm too pretty for a beard. All right. So here we go. What you're looking at is the Aussie yen opening out of position. See if I can clear this up. I don't want to zoom in quite yet because the most important details are here on these higher time frames. So let me clear this out. These are just for previous analysis. Okay. When your trade plan opens out of position, you need to wait for the retracement. What that little X is that I just deleted was yesterday the swing trading group met, and we were guessing where the future 4-hour 21 would be for a possible aggressive buy if you happen to be a bull, and more specifically if you were a bull down here where you were supposed to be a bull, right? Like the worst case scenario is you were not a bull here, you were not a bull here, you were not a bull here, but now you want to buy it way out of position, buying high when it's overpriced, when it's overbought. I'm trying to avoid you doing that, right? Again, this was a double bottom. We set up 2 weeks in advance. I have to zoom way out to see it there. Okay, so we set that up at least 2 weeks in advance. Great, easy. Then, right, so you had the opportunity to buy it. Then it made a higher low, swing trade on a weekly basis. That was also a buying opportunity. In fact, that's a hammock, right? And then 3, it made another higher high, higher low, roll reversal. So that's 3 opportunities. So my concern is, like, now you want to buy it? Why be aggressive now and throw that away, throw that away, and throw that away? This is when you should be aggressive here. This is an easy trade. That's an easy trade. So what do we do now? Well, you don't want to buy high for 2 reasons. One, you're not supposed to buy high. You're supposed to buy low. But also, where would a bear sell this? And a bear would sell it right there. If I was a bear, this 81.50 was just straightforward slap in the face sell zone. Okay, so I don't want to buy in someone else's sell zone. So if I was a bull, I'm trying to catch, oops, well, I guess I'll leave it that way. I want to catch a move up into like that. And that's what we talked about yesterday when we were still, way over here. So the better move here is up, then these guys take it down. So let me just readjust this a little bit. Come on now. Okay, so you can kind of look at it like this, where these bears are taking it down. And then bulls buy it back somewhere around the future 21. So imagine this 21 moving to the right, moving up, moving to the right, moving up every 4 hours. So 8 to 12 hours from now, 4-hour 21 should be about here, in which we would like to be long. Okay, if you're a bull. And if you're a bear, you already sold it at 81.50. What more did you want on a swing trade basis? It's aggressive, like I call this aggressive, meaning you probably want to keep your stop close, all that kind of stuff, or cut your lot size in half because it's aggressive. This has been an up move all week, and now you're selling an up move, but you're supposed to sell high, right? Will there be webinars in December? Of course, Andre. I need my Andre time. Yeah, Pharaoh. Yeah, well, sorry, man. So, you see what I mean? You're supposed to sell high. When you buy high, you're not aggressive, you're foolish. Okay? So in this case, bears are selling, and that's the perfect spot right there. This 81.50, that's perfect. And what they're risking is their stop just needs to be above here, basically, right? So what are they risking, 50, 60 pips? That's nothing for a swing trade. Okay? And even a bull understands this, and they're like, oh yeah, it's going to drop, and I'm going to buy it around this 81.20. Maybe if I'm lucky, 81.00. That's a whole different thought process than an amateur, isn't it? Where you're like, yep, I see this, bears are going to bring it down, then I'm going to buy it, and then off to the races up to the next level. So much better. Oh, that's terrible, Pharaoh. Okay. So yeah, let's check out oil because I want that to move. Remember, and the problem is last week I said if it goes lower than this line, I'm going to ignore it, and it's going to have to prove to me. So let's get this out of the way. Remember, you got to be in control, right? The only way to be in control is when you don't get what you want, you need to stop trading. There's no compromise. Right? What's the compromise? Oh yeah, I'll compromise. I'll walk out the door. You can negotiate by yourself. There's the compromise, right? So in this case, you don't want to keep buying it. Like, see, like that's the perfect swing buy, isn't it? That's what weekly swing traders want, right? And the trade plan is basically traded up into this pink zone, right? But I'm not buying it. I'm not going to buy it. It had its chance here or here or here. Like, no. WTI owes me. I'm not going to play until it apologizes. And the apology now, or whatever you want to call it, is it needs to pop back up above that gray zone. Otherwise, I don't want to play. It's a backstabbing, ex-girlfriend. Okay? It's just awkward. Like, I don't want to play that game. It's like taking your wife to your high school reunion. That's got to be an epic fail, huh? Like, that's weird, honey. That's the 5th time today I was slapped. I don't even know these women. Who are these people? Anyways, I don't know where that came from. Erase that from the script. Up, down, down. Yeah, okay, maybe I'll buy up here. Okay? It's going to have to break back above, drop back below, and even then I might not buy it. I might wait for even the next one. I guess like this. Yeah, that must have come up in my mind. A friend of mine has his 30th high school reunion. 30th? You're like, wow. Like you go there and your ex-girlfriends are grandmas. Like, oh, is that Kathy Fulcher? Really? Oh. I made out with her underneath the bleachers at the football game? Really? Well, Hassan, why don't you download the version I use? Charts.fxbootcamp.com. So that brings up a good point. For all the people that went through the old form and never got the email to download, the new system does work. It was tested by hundreds of people. Charts.fxbootcamp.com. Okay. And that will get you my templates, my EAs, my indicators, all my profiles. So it gets you like, I don't know, 150 charts, all my indicators, all my everything, all these pivots, all the layouts. Yep. So right on. See? Thank you guys. So Hassan, if you have the wrong version of pivots and they don't work anymore, use the ones I have. So go to charts.fxbootcamp.com. And then Hadir, there's nothing I can do. It's not me. It's completely redesigned from scratch using completely different technology. I've wasted at least $1,000. So it works. So I don't know what's blocking it, Hadir, and I apologize, but I don't think it's me. Someone along the way is blocking it. Not me. All right. So here we are. Pound dollar. One of the things I talked about yesterday was the gap. Yep. Right. Now, see if you can figure out what happens next. When it says, please check your email, think, how do I get the honey from the honey pot? Yeah, it might be in your email. Check your email. If you put in a fake email, I'm not sending it to you. All right. Yeah. There you go, Murray. So we talked about the gap. Let's see. It doesn't really look much like a gap now. So we met at market open yesterday, the swing trading group and I have to have it way over here just to try to fit it. But here's Friday's close, was actually way down here, a little lower than that. Okay, Friday's close was about here. Okay. And then the Sunday open was here. Isn't that cool? So one of the things I taught was nature abhors a vacuum. So we were here at the time, and this is where the open was. So price should fill this empty gap, which was about there. So it filled the gap. Cool. Now, often, and it doesn't usually look rangy like this, but often what's supposed to happen is it takes off to the upside, and well, in the direction of the original gap. Okay, so it gapped up, it came down, all, in this case, completely filled the gap. And now it was supposed to go up. But that hasn't worked either. And so that's just a warning sign. So for it to head back up was no brainer. To have it collapse again is not good, especially off a London Open or something. So that's very disappointing. Okay. And now the interesting thing is bears last week would have loved to have sold this. Then they would have saw a gap high. So they said, okay, well, it would fill the gap and then maybe continue. So I don't think bulls are happy on this or bears are happy on this. Okay. This looks like just noise, really a disaster. Can you take trades based on support and resistance? That's the only way you take the trade. Yeah, Joe's like, why are we consolidating here? Yeah, maybe the midterm elections tomorrow. Yeah. So in any sort of major election, but in particular for the one, the reserve currency. The reserve currency is more important than other currencies for a multitude of reasons. Not that America is the world's greatest. It's just it is the reserve currency. So what happens here is important. In this case, there is uncertainty tomorrow that the U.S. government will reshuffle, that there will be a change in representation to the point where the Republican Party loses a significant chunk of their power. And if that's true, policy is likely to change in the United States. Okay? And this uncertainty is bad. It has nothing to do with what party's in power, what party's going to take power, or all that kind of stuff. The uncertainty, because let's say, if you're considering building a significant project, let's say somehow, I don't know, you want to build a project, and it's going to take you 3 years. That you could be worried about policy change in the United States if it's going to affect your long-term project, especially if you got billions of dollars on the line. So, this matters. So what does it all mean? Uncertainty typically means bad. Uncertainty typically means risk off. In this case, we don't even have risk off. It's just sideways, which tells me the market, how about this? When I listened to Bloomberg, so I listened to them over the weekend. I took a bubble bath, fell asleep in the bubble bath, by the way, listening to Bloomberg radio, drinking my Japanese beer. Yeah, that's what I did on Friday after NFP. Took a bubble bath, fell asleep after I finished my beer. But I was listening to Bloomberg, and it was amazing how biased the news is. Even Bloomberg they're just like they're left leaning. Maybe not terribly left leaning. Maybe they don't even know it. But it's not as bad as NPR. But it was definitely Trump is crazy kind of stuff. Okay, great. But I look at the market, and the market's not saying, hey, the Republicans are definitely going to lose power here. That's what I hear on the news. Even Bloomberg. I'm not listening to Fox. I'm listening to Bloomberg. And they're like, yeah, when they lose their power, and Trump's crazy rhetoric is not helping. What do you mean crazy rhetoric? I thought this was news. Just report it, right? I don't need the crazy part. I can make my own decision. So anyways, it seems very one-sided when I listen to the media, and I don't listen to general media. I don't watch TV, and I don't listen to the radio. I just have this Bloomberg thing. Anyways, so I imagine the general media is very, very, very biased. And when I look at the charts, I don't see the same. It's moving sideways. The market is not reacting like there's going to be a massive shift in the government. And more like government policy and all that kind of stuff, okay? Left-leaning means favoring the Democratic Party versus the Republican Party. So just when they say, when the reporter is in an interview and they're like, well, Trump's crazy rhetoric doesn't help the Republican Party. Well, that's clearly biased. What do you mean crazy rhetoric? I know he is crazy, but a reporter's not supposed to say that. Yes, liberal, right? They're not supposed to say that. He tweets. Okay, that's him, but you don't have to say it's crazy rhetoric. His social media rhetoric, his whatever, but you don't need the crazy part. I can determine whether I think it's crazy or not, okay? But anyways, so look, here's how you really should filter through the world. Instead of listening to these babbling idiots on TV, you look at the market. This is trillions of dollars a day, $6 trillion a day. There's a lot of smart in here, and they're not interested in rhetoric. They're interested in managing their billions and trillions of dollars of portfolio risk. And right now, like Joe's mentioned a couple of times, the consolidation or the ranginess seems to indicate that people are waiting for the elections tomorrow. Okay, good. That makes sense to me. Do you see a massive exodus of positions? No. The massive exodus of positions would tell me that people are assuming the Republicans are going to lose party. They don't care about the Republicans. They don't care about the Democrats per se. The only thing they care about is that there would be a change. And the change is uncertain. Like, what does that mean? Do we bring back Obamacare? Do we throw other things away? And what about the Mexican wall or whatever? It's just like, what happens now if you have a business plan that's going to take 5 years and billions of dollars, and now you're like, well, I don't know how the United States is going to be run. And what about all of these trade deals? Are we scrapping them? Are we going back to this? So we're not seeing a mass exodus. We see concern, but we don't see a mass exodus. So whatever you hear on TV is just people trying to get ratings, doing what they do. I mean, they're super jazzed about it, but it's their job to be super jazzed about it. If the Republicans lose power, if they lose control of Congress or the Senate tomorrow, okay, the dollar's going to get really strong. The yen is going to get really strong. And this whole thing comes sliding down like a mudslide. Okay? And it's not because of anything except increase in uncertainty. What will happen if the Republicans don't have control? Right? It's just uncertainty. And therefore, it's not a good time to add risk to your portfolio. It's a good time to withdraw risk. Okay? That's all it is. Because it just is difficult to plan the next couple of years if you don't know what's going to happen. And if the U.S. government, because, look, it's a pissing match, right? That's all. Nothing ever seems to get done. They just pee on each other's shoes all day. So now it's like, aha, the Democrats are going to come in and pee on all the Republican shoes. Oh, you can't have that bill. You can't have that bill. This is for that judge you put on the Supreme Court. This is retaliation, brother, right? And they're, whoa, all this stuff. You're like, why don't you just govern? Why don't you do something good for America, right? But you know that ain't going to happen. So right now, if there's a change in power, then there's almost for sure going to be a change in policy, and we don't even know what that is. We don't know if it's going to be better. We don't know if it's going to be worse. We just know it's different, and we've been planning on one thing for a couple of years. So if the Republicans win and maintain their power in Congress and the Senate, and of course they have the White House, well, then we're like, woohoo, everything's good again. Just we're going to go that way. You may not like going that way. You might think it's the wrong way, but at least now we know that's where we're going. And that's all that matters. It's not that the Republicans are better or the Democrats are better. I'm Canadian. I don't give a damn about both. If we're going there, then I know how to make money. But if we suddenly need to go there, like, whoa, I got to shift because I've planned on going here. But if we're going there now, I got to adjust, right? So if we don't have to adjust, then everything's good. And you watch, the dollar will weaken, the yen will weaken, right? And NPR and I guess Bloomberg now can tell us how bad that is, and whatever. Off we go. Okay, so that's a trader's point of view on how to read the market when it comes to politics. We just want to know where we're going. What are the rules of engagement? Just tell me what the rules of engagement are. And if it means we're all going that way, then good. I got the skills, I'll go that way too, and I'll make money. But you just have to tell me where we're going, and I got the rest, right? So that's what this election is about. Are we going to continue going in the path we're on, or are we going to change course? And if we're going to change course, then I got to pull all the stuff that I already built, and I got to move it over there, and that uncertainty is risk and not good for me, and all this kind of stuff. It's expensive. So that's what it comes down to. Okay? Is that helpful, guys? That's a trader's view on how to trade the market. If you see it on TV, it's wrong. Is that too general? Thanks, Alan. Give him a hug for me, huh? Say this one's from Wayne. Oh, slap him down low. Whoop, sorry, babe. You're like, Alan, I hate when you do that, Alan. Thank you, Alan. All right. Yens, maybe? We did quite a few yens already. Okay. Pound yen. Open out of position, fill the gap, continued mission. There's no weeklies above us. There's no monthlies above us. There is this, which is the bottom of this range. And that makes sense to me, doesn't it? A bear is going to be a little disappointed. This is a little too high. This is like, this should have stayed below 147 if you were a bear. So you were very disappointed about this as a bear. You can still sell it, but you're probably going to wait for a lower low, lower high scenario. So a bear might want to see this first. And then sell here. Okay. Because we were supposed to stay below this buck 47, which is here 147.00. We were supposed to stay below that line, so we need to have a lower high, lower low retracement and catch a roll reversal sort of in that area. Okay. Doji-san says good info. Well, thank you, Doji-san. Yeah, so going back to that conversation on politics, if the Republicans maintain control of the House and the Senate, the stock market's going to rally, the US dollar is going to weaken, the Japanese yen is going to weaken, the Swiss franc is going to weaken. It'll be game on across the board. You guys remember the Trump bump after he got elected? So it's there's two things to that. One, there's no massive policy change coming. And that brings certainty again. We know where we're going. We know what to expect from Trump. We know what to expect from the Republicans. Nothing changes, so you don't have to change your plans. It's a big relief. You might not like it, but it's still a relief that you don't have to change anything. And then boom, so it takes off. Okay? But there's also a difference between the Democratic Party's view of the role of government and a Republican view for the role of government. And generally speaking, in very, very, very general terms, the Democrats want a bigger government and spend more money on social welfare programs. It's just factual. I don't think anyone would disagree with that. And Republicans would rather want rich white guys to get richer. And I'm totally cool with that. You know, I'm okay with that. So you can just imagine, like Trump yelling at the Federal Reserve because they're raising interest rates too high. Well, look, okay, we know the Federal Reserve is independent. There's a good reason for it because the president very often will do stuff like that, right? Because he wants the economy to keep booming. He doesn't care about inflation. Well, the Fed cares about inflation. It's part of their mandate. But in this case, the stock market would also rally because those who invest in the stock market are those ones that are going to benefit from the stock market rally. Okay? Yeah, I'll do gold right now, Mohammed. I'll do it right now. How about that? Let's do gold. Let's do gold for Mo. Mo, do you have physical gold? Like the reason I ask is, are you concerned about hedging it? Okay, Benny. Oh, okay. So you're trading it speculatively. Okay. All right. Well, we've been here for a long while, and this is what I drew in the past. That based on this move here, it should rise, and then around 123.34, right? 123.34.50, or 1,234.56, 56.7 cents. Should fall into here. So we've already got it planned. Okay. Okay. So what would a bull do, huh? Well, I have this area in here because it seems to be, support, resistance, resistance, resistance. And I'll bring this down a little bit. Okay. Well, you know what? Let me just kill this one. Okay. So anyone that is a bear here, they're actually targeting the green zone down here. Okay. And then let me back this out a little bit. You can see that I have this here. Not because of the pivot. We had this here weeks ago, so this in the future. You can see that's why we had it coming up. And then if it comes back down, this will probably be an area of interest for a bull. Okay. And that's probably all we'll get this week. I don't think we'll get this price. It doesn't seem to be that important anymore. But I think we can mark this level, right? Which kind of feels like no man's land right now. That doesn't seem that important either, so I don't think we'll get there under these conditions. So right now, if you were bear, that was a pretty obvious sell up on the high. Right, you get it, it was marked this way, for example. Okay, selling that up on the high would target this, and then buyers are going to look somewhere in this gray zone. So even if it falls, that is going to be a good plan. But the weekly buy zone, let me zoom into here, is here. So plan A for a bull is actually buy it around here. Okay, bears have already done their job. It's already happened. Right? Think about this. It was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You know, the 48 hours of candles we topped out here. So they've taken their shot. Obviously, on a 15 or minute chart, or even an hourly chart, you would have found something in here to like if you were already a bear, right? Lower low, lower high, for example, right off the pivot. All of that's pretty easy if you're already a bear and you already have a trade plan, right? Right? You're not going to miss that, are you? And then now, so for bulls, now you got to start when you get into here, this 112.26, you should probably drop into like a 5-minute chart or a 15-minute chart and start looking for a change of direction, like a double bottom, higher high, higher low, if you're a bull. Okay. And same thing if it comes down here, it's still part of the buy zone. Okay, use your technical analysis to confirm or deny. I kind of think it should go up here or it ain't going to go up, but you know, this is the standard operating procedure to buy in there. But for me, it would be more like plan A would buy here and then plan B would be the double bottom. I think if I were doing this as a bull, like I said, bears would have sold this, I don't know, when the market opened. Like, where were you when the market opened? That's when you're supposed to be swing trading, right? You're supposed to be here on Sunday, ready to sell. And then you get the weekly pivot. I mean, if you were a bear and you were at your charts Sunday afternoon when the market opened and you saw that, you would have sold it. Because bear in mind, that's the exact pivot, right? If you read my book, for example, and it says, well, if you're a bear, you should sell. And you'd look at that pivot and say, 123.34.70. And then on Sunday morning, the market opens and it goes pop to 1,234.70. Oh, okay, it went 1.5 pennies above. And then you would have sold it and you would have been profitable. But that's why it's a strategy, right? Who invented that? I missed it, Joe. Sorry. So not just this supply and demand trading strategy. Can you be more specific? Do you supply and demand or support resistance, or depends on what you're talking about? Are we talking about gold? Are we talking about like the supply and demand for gold specifically? Yeah, well, what strategy? I'd like to know more, and I could likely comment. I mean, if we're talking about the supply and demand for gold, I can bust out a supply and demand chart. I mean, we could just... It says rice over there. Okay. So are we even here? Is Sinatra even here? Sinatra. Is it 16 years? That sounds about right. I actually have no idea. Okay. So are you talking about the supply and demand for a commodity and how that affects price? Just trying to understand your question. So I have it set up to answer that question, but if that's not it, tell me now before I waste everyone's time. Because I'm not sure, like you might actually have meant support and resistance, not supply and demand, but this is about to answer a supply and demand question. Is this good? Okay, we're good. All right, so if gold is very, very, very expensive, how much quantity would you buy with your money? The price of gold is this number here. We'll call it an arbitrary, I don't know, X, X price. If price is high, you tend to buy very little. Okay, see what I mean? If price is medium, you tend to buy more. So see how quantity shifts from Q1 to Q2? From 1 to 2 to 3 to 4 to 5 to 6 to 7. So this might be a 1 and this might be a 7, for example. And then if price is really low, you can afford to buy a lot, right? Now, the difference in all of this will affect the slope. You can have a steep slope, a flat slope, all this kind of stuff. So when they're talking about the slope of the yield curve and stuff, they're kind of talking about stuff like this. So this is all about demand. The more expensive something is, the less of it that's demanded. And the cheaper something is per unit, typically the more that can be demanded, maybe just because it's affordable. So it's like a $1 hamburger, like if you were Starbucks and you did a test, if you raise the price of a latte by 10 cents, does it affect the demand for the latte? What if you raised the price of a latte by $1? Do you think they'll sell the same number of units of lattes if you raised it by $1? You're like, well, dude, $1's a lot. If it goes from $4 to $5 or $5 to $6, yeah, I think people will push back and go find something else, right? But if you raised it by 10 cents, do you think people will freak out? No. And if you lowered the price of a latte, do you think Starbucks, if you lowered it by $1, if there was a sale and they advertised it like lattes are $1 off every latte for the month of November, suddenly there'd be a huge skyrocket demand for lattes, right? So price can affect quantity. And for that reason, because high prices demand low quantity and low prices, right, demand a high quantity, the slope of the demand curve is down and to the right. So we'll call this D1. Demand 1. Yeah. And then if you have a bunch of gold nuggets and somebody gives you a low ball price, do you sell it? No. So they offer you a little more. Do you sell it? No. So a little more. No. No, no. But at some point, you get to a price where you're like, yeah, that's acceptable. And we call that equilibrium. Okay? So If you've ever gone to university, you know always label your charts. So this is S1. Supply 1. And the market price is when supply equals demand. That will get you a price, right? Let's see if I can make this really pretty. No, I can't. I thought I could get like a different type of line. No, anyways. Okay, so to label this properly, the equilibrium is P1, price 1. Okay. And down there is going to be Q1. That's the equilibrium price. Okay. At P1, the market will demand quantity 1. At price 1, they'll demand quantity 1. That's great. So now we're talking about supply and demand, right? And we're asking ourselves, like, I'm also doing this for oil. You remember how sometimes I say, well, this is a supply side issue? I'm talking about the supply slope, the supply curve. And I say, well, demand is pretty constant, which means the demand curve is not shifting. And I do think over time, macroeconomics will improve for oil. That would shift the demand curve. But right now we have supply side issues, which means I'm not actually worried about the D1, I'm worried about the S1. Okay, so I can shift this now and say, no, we're actually talking about the oil market. It's the same economics, supply and demand. So right now, right, oil prices have come down, and it's because Iran and some of the other trading partners have decided to pump as much oil into the market as possible because they know Iran has now, and they knew this that it was coming, but Iran's oil has now been embargoed by basically everybody. Okay? So in anticipation of this shortage of oil, the market has produced extra oil, and then they're going to draw down that extra, this excess oil, over time to try to smooth things, because what they don't want to do is run out of oil, be short of oil for what's demanded. Okay, so anyways, let's talk about this. So the market produced more oil than what was demanded. So this is what's happening. And then because of the supply concern, the market produced extra oil because they were concerned about a gap. So that means quantity of oil went up. The supply of oil went to the right. So now we're over here. Okay, we went from Q1, remember, label your chart, to Q2. Okay. Okay, and that means there was a shift from this supply to that supply. It shifted to the right, and quantity went up. Label your charts. Come on now. Supply 2. Okay, so what happened to price in this case? Label your chart. T2. Price fell from P1 to P2. Okay. And so I've been saying we have a supply side issue going on with oil lately, in fact, over the whole month of October. And I believe it had to do with this anticipation that the United States, I guess it was today, the United States today is placing an embargo on Iranian oil, which is what, 1 million barrels a day? Okay. And in anticipation of losing this supply, the rest of the world produced extra oil. So now that we've lost 1 million barrels a day, well, let's say we stockpiled an extra 10 or 20 million barrels, so we could probably get through a month. But over the course of a month, what's going to happen? Maybe what? Let's put it here. Maybe we move to S3. So demand is equal. We've lost Iran. No one's pumping the extra. So we move to S3 now, which means we move from S2 to S3. Okay, which means we shift the equilibrium. To quantity 3. Oops. Well, we'll leave it there. And then now we're here. What happened to price? Oops. Almost lost a point. Okay. Price went from P2 to P3, so it started going up again. Okay, Sinatra? And that's how that's supply and demand economics, or supply and demand trading. And that's what I've been anticipating all the month of October. I've been saying, look, oil prices are coming down because I believe it's a supply side issue. There's just too much oil, right? The big concern is, what if the global business, right, global economic activity is slowed down? Therefore, we don't need as much oil because we're shutting factories. And now you're shifting that curve instead. Okay. And that's a much bigger problem. Oops. So, like, if there's too much oil in the world, what can you do to fix it? I guess I can get rid of this. If there's too much oil in the world, what can you do to fix it? Is it fairly easy? So price still comes down. And the degree to which it falls has to do with the slope of the curve and all this kind of stuff. But, okay, so if we move from Q1 to this new Q2, less is demanded because we're shutting down factories, and then because less is demanded, price is falling. That's not an easy thing to fix, right? You can't just go to like China and say, come on, guys, let's get these factories going. That's a real problem if less energy is being demanded by the world economy. That's a real bad sign. Now, if there's too much supply, you can just turn the spigot off, right? What happens is price falls, and then the people selling this stuff says, I don't want to sell it at this low price. So they automatically turn it off. So turning it on and turning it off as far as oil, that's fine. That's usually pretty easy. It's when demand is higher than the supply, that means the market's booming and we can't suck this energy out of the environment fast enough. But if it's dropping because we're shutting factories down and laying people off, that's also a big problem, right? So the demand side seems to be pretty stable right now. I'm not really worried about that. I think it's slowly increasing over time. So 1 year, and then the next one's the next year, and then the next one's the next year. prices slowly increase, right? But to see a massive collapse in demand is a very difficult thing to fix. And supply, we can just adjust. Okay. So hopefully that was helpful, Sinatra, and hopefully it was on target for the question you had. That's right, Rasta. You got it. Rasta's right. Were you looking to hire me and make decisions for you? I preach to teach, because some of you never had this. All right. So anyways, if you were a bull, we would buy a dip at support and take it up. So Rasta, what I would suggest is you listen for the next week or two, and you can see these trade plans come to fruition, and you can see if you can possibly learn something. Right? It's just that I have been doing this for a very long time, so I might have learned a few things, and I'm here to share them with you, man. Just hear me out. Give me some time. Open up your ears. Can't listen while you preach. And I think that's it for the day. So happy Monday to you. And we have a big day tomorrow. I'm not sure what the market's going to do, if anything, tomorrow. Maybe we should all go golfing or kayaking or something. But I'll be here tomorrow. Maybe Rasta will be too. Peace on earth. May the pips be with you. May your profits be above average. Hope you're finding tons of success. I wish you the best in the trading day and the trading week. I'll see you tomorrow. Oh, hey, don't forget the like, to subscribe, and then, of course, the link to my chart templates and profiles are in the description. And now it works for 99.999. I'm not American, so I can't vote. My wife has voted, yes. So did Sinatra say if I answered his question or not? After all of that? Yeah. People are strange when you're a stranger. People look ugly when you're alone. Well, thank you, Arturo. All right, see you tomorrow, guys. Thank you for being on my team. I appreciate it.